It's funny, here I am, 94 years old, and folks are still asking me the same question they did when I was 40. Warren, how did you do it? How did you get so wealthy? And the truth is, my answer hasn't changed a bit over all these years. Most people tend to think building wealth is some complex puzzle. They imagine you need a secret formula or insider knowledge only those Wall Street types possess. But the reality is quite different. I remember back in Omaha when I was just a kid, maybe 10 years old, I had a newspaper route. Every morning before school, rain or shine, I'd deliver 500 papers. And my dad, he'd watch me counting my coins at the kitchen table each week. He wasn't much for words, but one day he shared something I've never forgotten. He said, Warren, it's not about how much you earn, it's about how much you keep and what you do with what you keep. That was it, plain and simple. And after all these decades, all the companies I've acquired, all the deals I've been a part of, that lesson still rings true. So today I want to share with you the habits, the genuine, practical habits that formed the foundation of everything I've achieved. No abstract theories, no fancy strategies, just simple, effective things that anyone can do if they're willing to exercise patience. Let's start with something that most people might not be thrilled to hear. You have to live below your means. I know it sounds unexciting, like something your grandmother would advise, but that's precisely why many people disregard it. They're chasing the thrill, the hot stock tips, the quick, rich schemes. However, true wealth begins with creating a gap. What do I mean by that? Simply, it's the difference between what you earn and what you spend. That space in between, that's where your financial future takes shape. I still live in the same house I bought back in 1958, paid $30,500 for it. People find that peculiar. They say, Warren, you're one of the wealthiest people in the world. Why not buy a mansion? Why not get yourself a yacht? And I tell them, because I'm content. This house has everything I need. It's where I raised my children. It's where Susan and I built our life together. Why would I trade that for marble floors and a bunch of empty rooms? You see, every dollar you spend on things you don't really need is a dollar that can't work for you. It can't compound. It can't grow. It's simply gone. And here's what most people overlook. When you buy something expensive today, like a $50,000 car you don't truly need, you're not just spending $50,000. You're also spending what that money could potentially become in 20 or 30 years. At a 10% growth rate, that $50,000 transforms into over $300,000 in 20 years. Think about that trade. You exchanged a car for $350,000. Was it really worth it? Now, I'm not suggesting you live like a monk, depriving yourself of all enjoyment. But it's crucial to ask yourself what truly brings you happiness. And from my experience, I can tell you that most of the expensive stuff doesn't. The most valuable things in life are typically free or close to it. Quality time with loved ones, work that you find fulfilling, a captivating book, a friendly game of bridge. That's how I choose to spend my time, and I'm a pretty content guy. The second thing, and this is crucial, is that you must invest in yourself first. The best investment you can make isn't in stocks or real estate. It's in you, your skills, your knowledge, your abilities. I've been saying this for years. Nobody can ever take that away from you. When I was younger, I was terrified of public speaking, absolutely petrified. I'd feel physically ill just thinking about it. So what did I do? I enrolled in a Dale Carnegie course. It cost me $100, which was a considerable sum for me back then. But that investment changed my life. It gave me the confidence to teach, to articulate my ideas, and to build relationships. And that skill has likely generated more value for me than any stock I've ever purchased. Your earning power is your greatest asset, especially when you're young. If you can enhance your skills, your ability to create value by even 10 or 20%, that compounds significantly over your entire career. Think about it. If you earn $50,000 a year and you improve your skills enough to earn $60,000, that's an extra $10,000 every year for the next 40 years. That adds up to $400,000. And that's before even considering investing it. So read, learn, take courses, find mentors, improve your communication skills, and become better at your craft. It's an investment that always pays dividends. Now, here's something that might sound contradictory to what I just said. You need to be patient, extremely patient. We live in a world where everyone expects instant gratification, fast food, fast internet, fast money. But building true wealth doesn't work that way. I always say the stock market is a device for transferring money from the impatient to the patient. And that's precisely what I've witnessed time and time again. Take Coca-Cola, for example. I started buying it in 1988, and people questioned it. Warren, they said, it's a mature company. Where's the growth going to come from? But I knew people would still be drinking Coke in 20 years, in 30 years, in 50 years. And I was willing to wait. You know what happened? That investment has generated billions. I've learned that patience isn't just a virtue in investing. It's essentially the whole game. It's not about timing the market perfectly, but about being patient enough to let a good thing continue being good. Find something solid, something that will still be relevant in 20 years, and then simply hold on. Don't obsess over the stock price daily. Don't panic when it dips. Don't become overly greedy when it rises. Just let it be. I like to think of it like a farmer. You plant seeds in the spring. You don't dig them up every week to see if they're growing. You water them, you nurture them, and you give them time. And in the fall, you reap the harvest. Investing works the same way. The problem is that most people can't handle the waiting. They see their neighbor making quick money in some trendy stock and they think, I'm missing out. So they jump in, typically right before it crashes. Here's another rule that has saved me a lot of heartache over the years. Only invest in what you understand. It's a simple rule, yet hardly anyone follows it. Back in the late 90s, everyone was obsessed with tech stocks, .com this, .com that. And people would ask me, Warren, why aren't you buying these? They're going up 50%, 100% a month. And I'd respond, because I don't understand them. I don't understand the business model. I don't know how they make money. I can't predict what they'll look like in 10 years, so I'm not buying. People thought I was old-fashioned, out of touch, past my prime. Then the whole thing collapsed. Trillions of dollars simply vanished. And many people who thought they were geniuses lost everything. But we did just fine at Berkshire because we stuck to what we understood. Now, does that mean you shouldn't learn new things? Absolutely not. I'm constantly learning. But there's a difference between learning about something and investing in something you don't comprehend. See, when you invest in what you know, when you truly understand the business, you have confidence. And that confidence allows you to hold on when times get tough. If you own a stock and you don't really understand the company, the first time it drops 20%, you're going to panic and sell. And that's usually the worst possible time to sell. But if you understand it, if you know why you own it, then a drop in price is just noise. Or even better, it's an opportunity to buy more. So stay within your circle of competence. And if you want to expand that circle, that's great. but do it gradually and carefully. Learn first, invest later. Now, this next one is something I learned from my mentor, Ben Graham. You've got to have a margin of safety. What does that mean? It means don't cut things too close when you're investing, or really when you're dealing with money in any way. There's always uncertainty. Things don't always go according to plan. So you need a cushion, a buffer, room for error. Let me give you an example. If I'm evaluating a company and I believe it's worth $100, I don't pay $100 for it. I don't even pay $90. I wait until I can buy it for $60 or $70. Why? Because I might be wrong. Maybe it's only worth $80. Maybe the business faces unforeseen challenges. Maybe the economy takes a downturn. With a margin of safety, I can still make a profit. But if I paid full price, or if I overpaid, as many people do, then when things go wrong, I'm in trouble. This applies to your personal finances too. Don't borrow to your absolute limit. Don't spend every penny you earn. Don't assume everything will go perfectly. Have an emergency fund, have insurance, allow yourself some breathing room, because life is unpredictable, and the people who get into serious trouble are typically the ones who are operating without any margin for error. One stroke of bad luck and they're done. I've seen it happen countless times. Smart people, talented people, but they were too leveraged, too optimistic, too confident that nothing would go wrong. And then something did go wrong. So give yourself some leeway, build in safety, and assume you'll make mistakes, because you will. We all do. The question is, will your mistakes ruin you, or will they simply be learning experiences? That depends on your margin of safety. All right, here's one that might sound old-fashioned. Protect your reputation as if your life depends on it, because in a way it does. I've always said it takes 20 years to build a reputation and just 5 minutes to ruin it. And if you truly grasp that, you'll act differently. Your reputation is your most valuable asset. It's more valuable than money, because with a good reputation, you can always make more money. But if you lose your reputation, it's very difficult to regain. I've walked away from deals that would have made me a fortune because something didn't feel right, because the people involved weren't trustworthy, or because I didn't want my name associated with it. And every single time I was glad I did. Money comes and goes, opportunities come and go, but your reputation is the foundation of everything. People do business with people they trust. They invest with people they trust. They hire people they trust. And here's the key. You can't fake it. You can't pretend to be trustworthy. It has to be genuine. It has to be authentic. That means doing what you say you'll do, treating people fairly, and being H. I've never understood people who lie or cheat to get ahead. It always comes out, doesn't it? Eventually people find out, and once they do, you're finished. Nobody wants to work with someone they can't trust. So I've always believed in being the kind of person people can rely on, honest, fair, doing the right thing. Your reputation will take care of itself. Something I wish more people understood is the importance of avoiding debt like the plague. I truly mean it. Debt is dangerous, especially the kind of debt most people take on. It's like oxygen. In the right amount, it's fine, even helpful, but too much and you suffocate. I've witnessed so many smart, talented people get destroyed by debt. Credit cards, car loans, student loans, mortgages they couldn't truly afford. The debt starts small, manageable, but then life happens. You lose a job, have a medical emergency, the economy takes a downturn. Suddenly, that debt is crushing you. Every dollar you earn goes toward paying interest. You can't invest, you can't save, you're just stuck running in place, or worse, running backward. Now, I'm not saying all debt is inherently bad. If you borrow money to buy a house you can afford and you have a stable income, that can make sense. But borrowing to buy things you don't need, borrowing to maintain a lifestyle you can't actually afford, that's how people ruin their lives. I've never borrowed significant amounts of money for personal use. Never. Even when I was young and didn't have much, I lived within my means. I saved first, then I spent what was left. Most people do it backward. They spend first, then they try to save what's left, which is usually nothing, and then they borrow to make up the difference. That's a trap, a very difficult trap to escape. So if you're in debt, make it your top priority to get out. Pay it off. Cut up the credit cards. Live on less than you earn. It won't be easy, but it'll be worth it, because once you're debt-free, once you don't owe anyone anything, you'll experience a freedom you've never felt before. You'll be able to invest, to save, to build genuine wealth. But as long as you're in debt, you're essentially just working for the bank. Here's something that might surprise you. Keep learning. Never stop. Some people believe that once they finish school, they're done learning. They think they know what they need to know, and now it's simply about execution. But that's not how it works. The world evolves, technology advances, and industries transform. If you stop learning, you fall behind. I still read for 5 or 6 hours every day without fail. At my age, people ask me why I still read so much, what I'm preparing for. And I tell them I'm not preparing for anything specific. I'm simply interested, curious. I want to understand how things work. But the truth is that curiosity, that constant learning, is what has kept me relevant all these years. I understand businesses better because I read about them. I understand the economy better because I study it. I make better decisions because I've learned from my own mistakes and from the mistakes of others. And the beautiful thing about learning is that it compounds just like money. Every book you read provides you with knowledge. That knowledge helps you understand the next book better, which gives you even more knowledge, and so on. After a while, you start seeing patterns, connections, things that other people miss. That's the edge. That's what makes the difference. So read everything. Read about businesses, history, human nature. Read biographies of successful people, because every book you read is essentially a conversation with some of the most intelligent people who have ever lived. And unlike college, this education is free, or at least very inexpensive. Surround yourself with people better than you. That might sound odd, but think about it. If you're the smartest person in the room, you're in the wrong room. You want to be around people who challenge you, who stimulate your thinking, who push you to become better. I've been incredibly fortunate in my life to work with truly phenomenal people. Charlie, my partner for so many years, has made me a better investor, a better thinker, and a better person. We don't always agree. In fact, we disagree frequently, but that's precisely the point. He sees things I don't see. He asks questions I don't ask, and that makes us both better. I tell young people to be very mindful of the people they spend time with, because you tend to become like the people around you. It's simply human nature. If you associate with people who spend all their money, who don't save, who don't invest, you'll likely do the same. But if you spend time with people who read, who learn, who invest, who think long term, that will rub off on you too. The friends you make, the relationships you cultivate, those might be more valuable than money. I've gotten some of my best investment ideas from friends. I've avoided disasters because someone I trusted warned me. I've enjoyed my life more because I've surrounded myself with good people. So be intentional about it. I've always believed that the relationships you build are part of your wealth, perhaps the most important part. Seek out people you admire, people you can learn from, people who possess the qualities you want to develop, and equally be that kind of person for others. But if I had to choose the most crucial habit, it would be this: think long term. Most people think in terms of days, weeks, maybe months. What's going to happen tomorrow? What's the stock price today? How can I make money quickly? But that's not how lasting wealth is built. Wealth is built over decades, not days or weeks. I like to say that time is the friend of the wonderful business and the enemy of the mediocre. A great company with a strong competitive advantage, capable management, and a product people love gets better with time, becomes more valuable, more profitable. But a mediocre company struggles, competition catches up, the business model becomes obsolete, and time simply exposes the weakness. So when I invest, I'm thinking 10 years out, 20 years out, sometimes even further. Where will this company be in 20 years? Will people still need this product? Will this business still exist? If the answer is yes, and I can buy it at a fair price, that's where I put my money, and then I largely forget about it. I don't obsess over the stock price daily, and I don't worry about quarterly earnings. I just let time work its magic. If you start with $10,000 and you earn 10% a year, in 10 years, you'll have roughly $26,000. Not bad, right? But if you wait 20 years, you'll have $67,000. After 30 years, it grows to $174,000. And in 40 years, you'll have $452,000. The same initial $10,000, the same 10% return, but time makes all the difference. That's why young people have such a tremendous advantage. They have time. If you're 25 years old and you start investing now, even with small amounts, you could be wealthy by the time you retire, not by doing anything complex, just by being patient. But if you wait until you're 50, you're facing an uphill battle. You've lost 25 years of compounding that you can never recover. So start now. Start small if you must, but start and think long term, always long term, because the future belongs to the patient. Well, I've talked a lot today, sharing 10 habits. Simple things, really, nothing fancy or complicated. Live below your means, invest in yourself, be patient, stick to what you understand, always maintain a margin of safety, guard your reputation, avoid debt, keep learning, surround yourself with good people, and think long term. That's it. That's how you build wealth. Not by being the smartest person, not by working on Wall Street, and not by getting lucky, but simply by consistently doing the right things over a very long period. You know, people occasionally ask me what I'd do differently if I could start over, what mistakes I'd avoid, and what opportunities I'd seize. And I tell them honestly, not much, because the core principles don't change and the fundamental habits don't change. What worked 70 years ago still works today. The world is undoubtedly different now. We have computers, the internet, and all sorts of technology I never imagined when I was young. But people haven't changed, and human nature hasn't changed. We still get greedy when we should be fearful, and we still get fearful when we should be greedy. We still crave instant gratification, and we still struggle with being patient. That's why these habits are so important. They run counter to our natural instincts, and they require discipline. They necessitate thinking differently from the crowd. But if you can do that, if you can master these simple things, you'll outperform 95% of investors, even most of the professionals, not because you're inherently smarter, but because you're more disciplined, more patient, and more focused on what truly matters. I've lived a long life and I've seen a lot: market crashes, recessions, wars, booms, and busts. And through it all, the people who thrived were the ones who adhered to the basics, who didn't panic, and who remained rational when everyone else was losing their heads. That can be you. It doesn't matter where you're starting from, how much money you have today, or if you've made mistakes in the past. What matters is what you do from this point forward. Start living below your means. Start investing, even if it's just a little. Start learning. Start surrounding yourself with good people and start thinking long term. Do those things, and I promise you, your life will be transformed 10 years from now, 20 years from now. You'll look back and be amazed at what you've created, not overnight, not quickly, but steadily lie like a tree growing, like a snowball rolling down a hill, like interest compounding slowly at first, then faster and faster until one day you look around and realize you're wealthy, not just in money, but in time, in freedom, and in peace of mind. And that's the real wealth. That's what it's all about. Well, I think that's all I wanted to say today. I hope it helps. I hope you'll take something away from this, even just one thing, one habit. It only takes a single moment to begin, just one step, one decision, then another and another until one day I find myself where I aspire to be. I have to remind myself of that sometimes, especially when I'm poring over documents that seem to lead nowhere. It's easy to get discouraged, but I remember to be patient. Time is, after all, on my side, and the story always unfolds eventually.